The short answer is yes. There's $400 billion of undeployed capital sitting on the sidelines from the largest real estate private equity players around the world. Much of it goes to Europe and the US. They are also raising more funds, so that's not going down, it's going up. They have to place that capital somewhere, and they're finding opportunities both in private asset portfolios and single assets, but also in public companies. We've already been on the receiving end of 2 public company acquisitions where our position in that company was at a much lower price than the privatization, and we're doing it right now with another company where we expect it to get taken out. So we think that private capital is paying fair prices for undervalued real estate in the public market. It's not everywhere, but we're seeing that happen, and we're actively looking at that as a way to augment the returns of our portfolio. So first I'll start with the United States. In the US, we're seeing an incredible improvement in the underlying demand supply for industrial, as I mentioned before, onshoring, e-commerce, last mile. We have found a small REIT called Indus Realty Trust, INDT is the ticker, that's based in Connecticut. Interesting about them is that they were not a REIT, they were a C Corp, a traditional corporation, that had 3 lines of business, one of which was industrial development, and the other was some other agricultural land business. They decided that they would sell off the other businesses and take their industrial portfolio and create a new name, Indus, and they went public as that company. They converted to a REIT about 8-9 months ago. When we saw that happen, we started getting under the hood and realized that they were a small development engine and they had a very good management team and nobody had heard of them. So we met with management on Zoom, did all the work and started buying the shares, and now it's a top 15 holding of ours, and they have extremely strong growth ahead of them. And only now I'm hearing other long-only managers and REITs in the US are just starting to become introduced to them after the stock's been up quite substantially already. That's one. I'm going to give a big one.
Okay.
I'm big on cell towers. I believe that mobile towers, as you call them, are perhaps the best piece of real estate on the planet. Why? Well, they are basically simple to build. They're on great pieces of land. They have unbelievable amounts of strong tenancy, and they're easy to maintain. And you have a monopoly when you own them because no one else is building them. The largest company in the world that owns them, which has a market cap of $140 billion, is a REIT called American Tower. Ticker is AMT. That company has grown its earnings, cash flow, right? Real earnings, cash flow, 13 to 15% per annum over the last 12 to 15 years. Why? Because globally, they're in the United States, they're in Latin America, they're in Europe, and they're in, where else? India. Soon here, I would imagine. They now have the largest portfolio of cell towers in the world, and they get growth 3 ways. One is they charge you more every time you need more space because you have more mobile usage on your system. So you come to them and say, I need another lease, so to speak. Well, we charge you more. We have CPI increases built into all their leases of 3 to 5%. And they build new towers. And they build towers at a very profitable return. So this company has low leverage. It has some of the best organic demand drivers in real estate in the world, low CapEx, and high growth. When I was in private equity, it was always real estate was location, location, location. And when I got into the public market real estate, I've learned it's location, location management. People matter in everything we do, right? The service you get anywhere you go and any business that you do, it's all about the people. And I've become part demographer, part economist, and psychologist over the last 25 years. And what you do is you meet these CEOs and CFOs and management teams umpteen times because you see them over and over again. You assess their abilities by not only how good they are, but how able they are, and also how much stock they own in their company, where they're aligned. And then you get to go on property tours and see the people below the top, the middle management, and see how good they are at leasing, acquisitions, development. And you see where the rubber meets the road. And I had done that for a long time. Remember, I came from private equity. I'm not an analyst that says, I have no idea what these people do. I've done it for 17 years. So I can assess the people because of my background, and the rest of it is kind of easy.